talk to Alpesh Patel, Chief Executive of Profinium Partners. Lovely to see you, Alpesh. So your first reaction to HSBC's news?
Well, it sounds like good news. And even when I was looking at the fine print, bleary-eyed at 4 a.m. when they released these results, even on the fine print, it looked positive. Like you said, they beat expectations and profits. You know, this is not 2008, which is the concern that a lot of people have, that could there be a banking crisis? Definitely not. And they're going to revisit dividend policy in February, which is what will really be critical to their share price recovering.
Now, they also said as well today that they expect losses from bad loans. And this is the worry in the back of everyone's minds, is how will banks be hit in the future? They're thinking that's going to be at the lower end of their range, sort of to $8 to $13 billion. And actually, other banks are coming out with similar positive statements, aren't they? So can we take from this that banks, as you say, won't be hit in a similar way as to what we saw in 2008?
Definitely won't be like 2008, because if you look at the decline in the share prices of some of the major banks, like a HSBC, they've been falling since 2018. As you know, it's at 1994, 1995 levels anyway. How much lower can it go? Well, back in 94, when it was at these prices, it dropped another 50%. That's unlikely. If it goes back to where it was just in January, you're looking at doubling your money. I think in terms of share prices, yes, the worst is over. But in terms of bad debt provision, they've learnt the lesson to make sure they make adequate provision. But we don't know how bad the second wave will get. That's the problem. So whilst I don't think they've underprovided for bad debt, we don't know what's going to happen with the virus going forward into next year, and it could see further falls in revenue. Whilst their revenue only fell 11%, could see further falls. That's the unknown factor. We do not know that part.
And I just want to ask you, Alpesh, I don't know if you heard my conversation with James about markets in general. We're going through a really volatile time. Next week is the US election, and people like you're going to be up all night trading. So where's the money going to be going? What's your thoughts about the week ahead?
We've been telling the people for most of this year to go into the more resilient stocks, the sort of safe as houses companies, the companies with billions in the bank account, which does mean the large blue chip tech companies. I'm afraid the safer ones. We are not gambling or speculating around either election results, Brexit outcome, or the next set of COVID figures. If people do that, they're going to get their fingers burnt, as we saw yesterday. And I bet you by the end of the week, we get a 600-point rally probably. We don't want to gamble around those kinds of trades. We're looking to see through all of those by having the more resilient tech companies. I'm afraid the Microsofts, the Amazons, the Squares, the PayPals, those kind of big companies which can see the headwinds of this uncertainty through.
All right, lovely to see you, Alpesh. See you again soon. Well, let's stay with markets news.